Welcome to The Explainer. Today we're diving into ZEISS Meditec, a heavy hitter in medical technology that just dropped a sales report that looks fantastic. So why on earth did their profits completely fall off a cliff? Let's unravel this billion-euro paradox.
All right, let's get right to the heart of the mystery. Sales are climbing, but the actual cash they're putting in their pocket, it's pretty much vanished. So is this a company in some kind of hidden crisis, or are we seeing the shadow of a huge strategic gamble that's just about to pay off?
Okay, first, the good news. And on the surface, it looks really good. Revenue, which is all the money coming in the front door, is up a very strong 7.8%, hitting nearly 2.23 billion euros. You see that number, you figure they're popping champagne corks, but maybe hold off on that.
Because this is where it gets weird. The consolidated profit, the money that's actually left after all the bills are paid, it absolutely cratered. Down 21%. It's kind of like your boss gives you a raise, but at the end of the month, you somehow have less money in your bank account. So what is eating all their profit?
To figure this out, we're going to do what any good analyst, or let's be honest, any good detective does. We're going to follow the money. Let's find out where the sales growth is actually coming from, because that might just tell us where all the profits went.
So a quick look at how they make their money shows two main engines: ophthalmology, that's all things eye care, and microsurgery. And as you can see, the eye care business is the real giant here. But get this, both of them are growing strong. So the leak isn't coming from a failing part of the company. The plot just got a little thicker.
And if we zoom out and look at the world map, it's the same story everywhere you look. From their biggest market in Asia-Pacific all the way to Europe and the Americas, sales are climbing. The engine is firing on all cylinders, which, frankly, just makes this whole profit mystery even more confusing.
Okay, so if sales are up across every product line and in every part of the world, the answer to our profit puzzle can't just be sitting on the surface. We've got to dig a little deeper into the company's grand strategy. And, well, it turns out they've made a massive company-changing bet.
And here it is, Exhibit A, our prime suspect. A 1 billion euro price tag to buy a Dutch company called DORC. Now, this isn't just a casual shopping trip. This is a strategic move designed to completely rewire the company's DNA. This one acquisition, it's the key to this whole puzzle.
So, what is this big strategic shift all about? Well, it's a classic business move called the razor and blade model. Just think of it like this. It's basically the Nespresso strategy, but for eyeball surgery. You don't just sell the fancy, expensive coffee machine one time, you get the customer hooked on buying your high-profit coffee pods forever and ever.
And this slide shows you exactly why they're making this massive bet. On the left, that's the old way of doing things, selling big, expensive machines. It's lumpy, it's unpredictable. But on the right, that's the new model, selling the consumables, the dyes, the lenses, the surgical kits. That creates a smooth, predictable river of cash that just keeps flowing, no matter what the economy's doing.
And here's the proof that it's working. Recurring revenue from things like services and those consumables now makes up about half of their entire business. Just let that sink in for a second. They are actively transforming from a company that just sells you a machine once into a subscription-style service you rely on constantly. That billion-euro bet is already paying off, at least strategically.
But, this massive strategic change didn't happen in a nice, quiet, calm market. There are some major outside forces, some serious economic headwinds that are also squeezing that bottom line. You can think of these as the accomplices in our profit mystery.
So what are these accomplices? Well, first, you've got the direct costs of the big purchase itself. Interest payments and all that fun accounting stuff. Then you throw in a little bit of geopolitical drama with U.S. tariffs. You stir in some really intense price pressure from their biggest market, China, and then you top it all off with a giant mountain of global red tape. It's a perfect storm for profits.
And let's just put these tariffs into perspective for a minute. A 30% tax on key products coming from China is like having to give up nearly a third of your asking price right at the border. For a global company like this, that's a constant, heavy anchor dragging down profits in the massive U.S. market.
At the same time, over in China, the government is flexing its muscles with this policy called volume-based procurement. Basically, the government is saying, hey, we'll guarantee you a huge number of sales, but you've got to give us a massive discount. Now, this is great for grabbing market share, but it absolutely crushes how much money you make on each individual item you sell. So, after laying out all the evidence, the booming sales, the disappearing profit, that billion-euro bet, and all those external headwinds, it is time to deliver the final verdict on this very complex case. What does this all mean?
And here it is, the final verdict. That 21% profit drop, it's not a mistake. It is not a sign of failure. It's the price tag. It is the calculated cost of their billion-euro transformation. ZEISS is sacrificing short-term profit today to build an unbreakable, more resilient fortress for tomorrow.
And that leaves us with the real billion-dollar question, doesn't it? Did ZEISS just build an untouchable fortress that will dominate for decades? Or did they just bet the entire castle on a single roll of the dice? That is the question investors are going to be watching for years to come.
So we've unpacked the what and the why, but the full story, including the competitive landscape and our detailed forecast, is in our complete analysis. To see how this massive gamble is likely to play out, you can get the full report from HDIN Research.